Hello there. The Bank of England has brought in a series of measures to help the UK through the current global situation, and this includes lowering the bank rate by 0.5%. Firstly, as ever, please kick that YouTube algorithm up the backside by giving this video a big fat like. And I'm always uploading new content, so please do check my YouTube channel daily. The Bank of England Monetary Policy Committee, or MPC, took the decision to lower interest rates from 0.75% to 0.25% at an unprogrammed meeting yesterday. The bank also brought in some other measures to smooth the economy over the short term to help the UK through any financial turmoil caused by this global situation. The bank says that the size of any economic shock is highly uncertain, but that activity is likely to weaken materially in the United Kingdom over the coming months. Temporary but significant disruptions to supply chains and weaker activity could challenge cash flows and increase demand for short-term credit from households and for working capital from companies. Such issues are likely to be most acute for smaller businesses. This economic shock will affect both demand and supply in the economy. So the bank has put in place measures to alleviate the situation. The first is the vote by the MPC to reduce the bank rate by 0.5%, together with the decision to maintain the level of quantitative easing at current levels, and a new funding scheme to help small and medium-sized businesses called the TFSME, which could allow access to borrowing at very close to that 0.25% bank rate. On top of that, the bank's Financial Policy Committee, or FPC, has reduced something called the Counter-Cyclical Capital Buffer Rate from 1% to 0%. The Counter-Cyclical Capital Buffer is there to make banks add capital in the good times, ready to smooth through the rough times, and the FPC thinks this will remain at 0% for about a year. And the Prudential Regulation Authority has set out its supervisory expectation that banks should not increase dividends or other distributions such as bonuses in response to these policy actions. The Bank of England also says that the release of the counter-cyclical capital buffer will support up to £190 billion of bank lending to businesses. That is equivalent to 13 times banks' net lending to businesses in 2019. Together with the TFSME, this means that banks should not face obstacles to supplying credit to the UK economy and of meeting the needs of businesses and households through temporary disruption. As well as, the Bank of England has operations in place to make loans to banks in all major currencies on a weekly basis. Banks have pre-positioned collateral with the Bank of England, enabling them to borrow around £300 billion through these facilities. These announcements come in the last week of Mark Carney's bank governorship and will of course be designed to dovetail neatly in with today's budget statement by the Chancellor. Those banking bods have been busy, haven't they? Anyway, if you want to hear more from me, please don't forget to subscribe and also press that little bell, or you won't get any notifications. And if you want to see more of me, buy a mug with my mug on it. So what do you think about all of this? Please share and comment, and thank you for watching. Please do like and share this video, and also subscribe to my channel. And when subscribing, please do remember to press on the little bell next to the subscribe button. That way you'll get an alert every single time I put up a new video. And thank you very much for watching.